The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin, Jeong. As global markets navigate an increasingly fractured economic landscape, Asia stands at a critical crossroads. From the trade-driven boom of the past decade to the fresh uncertainties posed by rising protectionism and geopolitical fragmentation, the region's future is anything but clear-cut. In recent weeks, the Trump administration's renewed tariff push has reignited fears of a global trade war, this time with a sharper focus on Asian economies. So with differentiated tariffs slapped on key regional players like India, South Korea, and even Singapore, many are now asking, what does this mean for Asia's growth story? Well, to find out more, joining me now is Christiaan Tuntono, who is a senior economist for Asia Pacific at Allianz Global Investors. Hi, Christiaan. Welcome to the show. Thank you so much for joining me.
Hello. So many thanks for inviting me here.
Thank you so much for joining us. Well, Christiaan, let's begin with the big picture here. How would you describe the current economic outlook for Asia going into the rest of 2025 and 2026?
Good questions. I think Asia growth is like to weaken over the second half this year and maybe going into 2026 also under the rising pressures from increased U.S. tariff rates, waning front-loaded shipments, weakening domestic demand, and fading support from past stimulus measures. If you look at the latest data, it shows that the U.S.-bound container shipments departing from China and other Asian economies have been moderating. The PMI new export orders and new electronic orders in the region have also started declining from previous highs. We expect the weakening export flows will also drag down the foreign direct investment inflows and capital expenditure spending in Asia also.
Okay, so which Asian economies do you see as the standout performers this year? Which are facing the most structural headwinds?
Let me talk about those that we think may outperform or those that are standing out first. I think those economies that are number one, having a good domestic demand-driven economy, number two, open for policy rate cuts, and number three, free of any idiosyncratic political economic concern. These economies are such as China, India, or Australia, which has room for policy rate cuts, likely to outperform, even though some economies probably face tariffs or tariff threats, but given that they're domestically driven, potentially the impact from external trade on the whole economy may not as big, right? So I think that these economies, right, would be more sheltered from external trade turbulence, and they can also reap benefits from lower domestic interest rates, right, to support consumption and investment demand. For example, Japan is also likely a domestic demand-driven economy, but then I'm concerned that the market could be exposed to many large-cap export-oriented companies. So they could still be, the market could still be susceptible to external trade turbulences. Whether they can do well, right, I think this probably could be related to whether the government can spend more money and to be easier on the fiscal policy, right, after the conclusion of the upper house election.
Okay, then what are some key drivers of growth right now in this region?
I think right now, the front-loaded shipments, those that try to preempt Trump tariffs, right, the lingering support on growth from past stimulus measures, and resilient domestic demand in some economies, like such as Malaysia or some other economies that we saw, could have been supporting the Asia growth at the moment. Some of these drivers, such as front-loaded shipments, is likely to fade out, right, going in the second half this year or 2026. But some drivers, right, such as stimulus support and domestic demand strength, actually can be regenerated, but it needs the government to actually issue new stimulus measures or lowering the domestic interest rates.
Well, meanwhile, Trump tariffs announcements have, caused a stir, especially with differentiated rates for countries like India, South Korea, and even here in Singapore. So what's your take on the intent behind this strategy?
Yeah, I think Trump's tariff strategy has three intents. The first one is to try to extract more trade or investment concessions from the regions, right? This is aimed to improve the U.S. current accounts and capital and financial account conditions, right? So that the trading partners in Asia would be willing to lower the tariff on tariff barriers, right, towards the U.S. Number two is about tackling the transshipments, right? When you see through the details in a number of trade deal U.S. signed, for example, with Vietnam, there is a clause saying that if the goods that are shipped out from Vietnam are not genuine Vietnamese products, if they are coming from, let's say, China, that have very high Chinese content, then they could be categorized as transshipment, right? And this is aimed to kind of block the flows from higher tariffed economies like China to lower tariff economies like Vietnam or Indonesia and others to evade U.S. tariffs, right? This is the second intent for that. And the third intent, as we can see by Trump's tough attitude towards like some BRICS country or with India particularly, is to kind of like blocking the formation of anti-Americans alignment, right? Remember that Trump's mentions about adding additional 10% tariffs that on countries that align themselves with some anti-American policies of BRICS, or we also hear about Trump threatening 100% tariffs on BRICS for moving away, quote unquote, from US dollar. And we also hear about China try to slap on a punitive 25% tariffs on India for purchasing Russian oils. I think all these are politically motivated intent. Yeah.
All right. Well, on that note, how are Asian economies responding to these tariffs?
I think there's two choices, but actually most economies took the second one. The first choice is like what China did, is to retaliate against Trump tariffs and then negotiate, right? But most economies that I saw in the world, kind of like they are more compliant to Trump's demand, right? Opening up to US imports, committing to raising investments into the US or others. Right now, we saw that most Asian economies have concluded negotiations and reached trade deals with Trump, with the US imposed tariff rates ranging between 15 to 20%. Although it is a visible step down from some of the original tariff rates that Trump's announced on 2nd of April, Liberation Day, but these tariff rates actually still represent a significant step up from before, and I think they would negatively affect the profit margins and order volume of the Asian exporters and really compromise the efficiency of the Asian supply chain.
Okay. Do these tariffs risk, though, disrupting Asia's supply chains again, or, have countries sufficiently diversified since the earlier U.S.-China trade war?
In terms of diversification, I think probably only Chinese manufacturing has started diversifying away from mainland China, and they go into investment in Southeast Asia and Mexico or other places as their production bases ever since the onset of the Trump trade war back in 2017, right? What was not anticipated right now, actually Trump expanded the scope of a trade war in his second term on almost everyone, almost all trading partners, allies, and with the aim to extract greater trade concessions from all, right, to promote American interests. We think Trump's tariff would erode the efficiency of the Asian supply chain, but whether it would really cause a restructuring or alteration would need to be seen. I think it's probably still early to say. Why I say that is because I think this is based on the fact that most Asian economies that are actually closely competitors with each other are being imposed with similar tariffs. For example, you can really see that the tariffs imposed on Japan, Korea, Taiwan, which are very more tech-focused or focused on automobiles, right? They are charged at 15%, 1.5, right? And ASEAN economies like Vietnam, Malaysia, Thailand, Indonesia, Philippines, you can really see those that are more labor-intensive economies are charged about 19 to 20%. So all these groups are competing close to each other, and they are charged more or less similar tariff rates. So I probably think that these tariffs may not disrupt the relative export competitiveness. And remember, tariff rates outside of Asia probably could be similar or higher as well. So this support the Asia staying as a supply chain manufacturing hub for the world.
But could this actually accelerate intra-Asia trade and regional economic blocs like RCEP becoming more dominant?
I think despite Trump's protectionist measures, China probably could take the lead in defending the rule-based global open trade regimes and promote greater regional trade integration with Asia and with other non-Asian economies in the world. But whether such efforts can be successful and be embraced by the world's major trading blocs, such as the European Union, I think remain to be seen. While the world sees Trump's protectionist measures as erratic, many economies also worry about the influx of cheap and highly competitive Chinese products into the domestic markets, right? Economies other than the US and China face the dilemma of, on the one hand, upholding the old open trade regimes under the WTO, but on the other hand, allowing Chinese exports to come in and potentially hamper the domestic manufacturing phase. in sectors such as automobile, green energy, and raw commodities, right? So it is not an easy choice, I would say.
Okay, well, given this outlook and landscape, then, how vulnerable is Asia to the next wave of global volatility?
I think Asia external sector is likely to be negatively impacted under Trump's tariffs, but we think the region remains very competitive in manufacturing. Hence, the existing supply chain is likely to remain intact and stay as the manufacturing hub of the world. Yeah.
Do you expect more companies and countries to pivot further away from the U.S.-centric trade in the coming years then? And could we see a U.S. plus one strategy replacing the old China plus one?
In my view, right, as the world's economy continues to grow, the weight or significance of U.S. domestic demand shall continue declining, right? Asia and China, right, have newly emerged as a new demand destinations for both goods and exports, right, such as the immediate components, luxury goods, etc., and service exports also, such as traveling, right, for the rest of the world. We remain skeptical that the U.S. can successfully reattract the manufacturing given the high factor of production costs, such as on land, labor, water, electricity, etc., and some of the onerous regulations that they have on the labor market environment at home. Yeah.
Okay. Well, before we let you go here, Christiaan, what would you say investors are watching most closely as indicators of whether Asia can weather the storm?
I think the high-frequency trade data from Asia, right, shipping and containers throughput information, coupled with like some company-level financial reporting on export volume, their profit margins, and capital expenditure plans probably can help reflect the impact of Trump's tariffs on Asia trade and the economy.
All right. Some great insights from you there. Thank you so much, Christiaan, for joining me today.
My great pleasure.
Thank you. That was Christiaan Tuntono, who is a senior economist for Asia Pacific at Allianz Global Investors. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.